Well, thanks for tuning in to India Market Close right here on NDTV Profit. It's not looking a good day for Indian markets, and we are down about 1%. We were in the green, by the way, and now down nearly 288 points. And the reason why this is important, viewers, is because while the Nifty is down about 1%, you look at the rest of the Asian screen. ASX, so Australia, Hong Kong, Shanghai, Japan, all other indices are in the green. If you look at that screen, Nifty is the only bucket which is in the red. So clearly there are issues. And remember, it's not just the Chinese markets which are going up. The other Asian screens are also in the green. So maybe this could be the, we're getting closer to the bottom, maybe the tactical bottom, if you will. Who knows? Remains to be seen. Bring up just very quickly the mid caps and the small cap, just the indices before we get to the specific pockets. It's carnage here in the small cap space. Frankly, the theme of the day is what's happening to the broader end of the spectrum. Look at that 3% downtick on the small cap index. And this is what worries investors, that the Nifty may fall under 2-3%, 4%. But what will happen to portfolios is the real concern. Anyhow, I'll bring up the large caps at least and talk about what's happening on the heat map on the large cap end. Because there is a fair degree of red, very little green, by the way. IT holding out marginally, some defensive bets like ITC, Bharti, etc. holding out. But look at everything else. NTPC, coal, Adani ports. Let me get in Tamanna, because Tamanna, there is no point in pointing out individual buckets here on the large cap end. Almost everything is beaten. The only ones holding out, which are the defensives, are probably worth talking about.
And that too, just by the skin of their teeth. Yeah, by a whisker. ITC, because of the NCLT order oaking their demerger. Everyone knew it was going to happen, so nothing too much there. Infosys, because IT is fairly okay. TCS maybe, but it's painful. Just let's pull up the advanced decline for a second and give you a sense of how bearish it's looking, and just look at that yawning gap there. This is truly a manic Monday. This is not a very pretty sight. 2015 declines to 143 advances. Finding winning trades today is like looking for a needle in a haystack, and it's a bad situation. Let's pull up the sectoral indices and give you a sense of whether there's anything moving positively. It's only IT stocks, 0.5% up over there. So it is a bit of carnage on the Lal Street today, and pain being seen. CPSE most badly hit. So government-run companies are bearing the brunt, about 4% down on this index. PSU banks are also down. Nifty Media, small cap, hurting badly. So, of course, your portfolios aren't looking great. What kind of stocks do you pick on a day like this becomes then the question. But anyway, we've attempted to pull some areas for particular focus. Let's talk about railways, since we talked about PSU companies and the pain that they're seeing there. An RVNL, a RailTel used to be favorites about 6 months ago, both down about 8% in today. Ola Electric is the other one that I would pick out. Perhaps their service issues in focus. 9% down on the stock, 8.5% down. NBCC, one spot of green, maybe because they've set their record date for their bonus issue today, 7th October. That's pretty much the only reason I can think of NBCC doing okay today in the storm which is following. Macrotech, Godrej Properties, they had good business updates. No one's even talking about the business updates anymore. At least that was a conversation in the morning. Macrotech still surviving, 2% up. Godrej Properties, not really. Bajaj Housing Finance calls out for a mention. On Friday, there was a report from HSBC, which we talked about in this show, which was an outlier call on Bajaj Housing Finance. Nevertheless, clearly FII pressure coming in. This is FII selling. Safe to call it, 9.5% down there. And apart from this, the only relief in the mid-cap IT space as well. LTI Mindtree, Persistent, Emphasis, still doing okay. So IT holding its head up high, because US markets, remember, gave us an excellent handover, and the story, they're not looking bad at all. What is bothering India domestically seems to be FII sell-off, move to China if crude prices go up because of what's happening between Iran, Israel, the whole Middle East situation on a tinderbox right now. That's bad for India as well. And maybe people are a little nervous, Niraj, ahead of the Haryana and Jammu and Kashmir election results tomorrow.
Yeah, this could be the one differentiating factor, if you will, for sure, aside of valuations. And I think we'll talk about that with our guest today. But wonder what Hemen Kapadia has to say. He looks at charts, and the charts, I'm sure, are looking terrible. He's Senior VP of Institutional Equity at KR Choksi Securities. Hemen, good having you. Thanks for taking the time out. How are you approaching trades today, Himen? I mean, let's assume you don't have specific levels in mind, but if somebody's looking to trade, is the Nifty giving you an opportunity to trade today?
A very good afternoon, Niraj. Thank you for having me on the show. It's always a pleasure. But today, for a change, I wish I would have been somewhere else and not in front of the camera. It's too late to sell, too early to buy, Niraj. Obviously, VIX is shot through the roof. Like Tamanna said, Dow Jones was nice, still looks good. Dollar index is up, which is a worry. Crude will bounce, obviously, because of geopolitical. Bank Nifty looks a shade better than the Nifty. No buy calls, no recommendations today, Niraj. 24,753 is my support level. I believe if we close above that, chances of a near-term respite increase. These are cash market levels, Niraj. Bank Nifty looks a shade better. So I wouldn't stick my neck out and say one should buy. But if you do, last hour's intraday low should be your stop loss. I'm not saying that is the end of the world sort of a scenario this week, or by the time we do the show next week, Niraj, I believe we would be higher from the current levels. So I'm expecting a 300 to 400 point bounce, but I'm not telling you this is the point where it's done on the downside. There are no holidays this week, so that's a respite. But I'd say below 24,753, time being there should be some relief respite coming in, Niraj.
Would you have any stock calls, and are any of them short calls, Himen, right now? I mean, I'm wondering what you do in an afternoon trade like this.
Frankly speaking, Tamanna, no calls because, like I said, too late to sell, too early to buy. I'd rather order something on Swiggy, Zomato and enjoy the day. But if you were to take a contra call, I would say the Bank Nifty looks just a shade better. And okay, if you're looking from a longer term point of view, Taman, there are many stocks starting with the Bajaj Twins, even Reliance Industries, Adani Ports. But I believe one should wait just a bit, maybe a late in the day. Let's wait for the market to stabilize a bit and let's just wait.
Okay. Would you look at, so you're saying you look at a Bajaj Housing, not Bajaj Housing, Bajaj Finance. Would you look at an HDFC?
HDFC, yes, it's disappointed. One gets the feeling that after a 4-year consolidation, the breakout would be historic momentous and we'd go to 2100 and 2400. But evidently, we've not reached that stage yet. But yes, if you're an investor, I believe, despite me looking at charts, it's almost impossible to catch the top and bottoms. That's a mission impossible sort of a thing. So if you are looking at stocks, I think HDFC Bank, one can be considered too. And you can do I wouldn't say SIP, but I'd probably buy, 1/4 or something at current levels. I'm not giving a stop loss because it's a long-term buy. Stop losses could get triggered in this mayhem. But yeah, I totally agree with you, Tamanna. HDFC Bank is one stock one can actually consider from a longer term point.
Any of the IT stocks you'd look at right now, Himen?
I'd go for the mainline ones, Tamanna. I'd just wait for the mid-caps, but Infi, TCS, HCL Tech, I think, take your pick. I think one needs to go for mainline quality currently because if money has to flow in, things have to reverse. This time around, I believe the heavy lifting will be done by the mainline stocks. The mid-cap, small-cap indices look heavy, distribution. They're due and ripe for a correction. So I would go with the mainline stock.
Now, you could argue that there are multiple reasons for the market to correct, but if you try and narrow it down to the key factors and in that, what we know and what we don't. So I think the three things that probably stand out, and the three reasons. One, FIs are on a selling spree and the reallocation, global reallocation, right? China getting $13 billion worth of inflows, India losing out on 30 or 40,000 crores worth of shares selling last week. So that is one key reason. Two, geopolitical uncertainty known. The outcome not known, but certainly the uncertainty and the fact that it stays is known. And three, something maybe Tamanna can talk in better detail, is the nervousness ahead of state elections. And yes, there are 2 states right now and 1 state coming up in the month of November. And clearly that is something that is probably that one differentiating factor in the minds of the markets as well. That could that, play small sport to policy decisions or otherwise, if indeed the BJP were not to have a good fairing or a good outing out there. Now, this is kite flying, of course, but certainly something that is playing on the mind.
It seems very likely, and we had Pradeep Gupta, very excited to talk to him. Ace pollster Pradeep Gupta of My Access India was on the show this morning, Niraj, and he's talking about how in Haryana, the JJP, which was the alliance partner of the BJP, is getting decimated. Congress is likely to come back after 10 years. That might be bothering markets as well, only from the simple perspective that this is the first set of polls after the Lok Sabha elections. Having said that, exit polls got it badly wrong then. So you never know what happens tomorrow, just from that point of view. But the other thing that Pradeep Gupta explained, and I think that's important for our viewers to understand, that state elections function very differently from what is happening at the centre. Haryana has its own story going on. At 10 years of a BJP government, so anti-incumbency factor then becomes very apparent there. Having said that, ahead of Maharashtra, and then after a Lok Sabha election, there is perhaps a bit of nervousness. Is this telling us about a shifting political direction? According to the people we've spoken about, no, this is a whole different story. What happens in the state happens in the state.
Yeah, well, and purely from a market's perspective, I'm hoping that is how it turns out to be as well, that it doesn't impact policy decisions for sure, but maybe that is a differentiating factor. So, yep, a slew of reasons why we are the ones which are being meted out the punishment while others are not. And, the punishment is being seen at the small cap end of the market. Look at the way the crack that has happened in the small cap index. It's as the small cap 250 has logged in the biggest fall since the yen carry trade corrective move happened on August 5th. 5.5% in 3 trading sessions, and a clutch of stocks which have corrected quite significantly in trade tells you a story or two. I mean, the market is not quite dissecting between the good, the bad, and the ugly, right? Almost everything is getting punished. I think the ones which are standing out are the ones which are actually not correcting, which is a great thing, and we'll talk about that a bit later, because I think my colleague Mihika will come in and talk about that. But here's the question, Hemen. What happens to some of the crowd favorites? The wind energy companies, Inox Wind has been taken to the cleaners. The defense names, and a lot of them are falling, or the railway stocks, right? Perennial favorites, suddenly, each of them over 5% lower, have corrected nearly 50% from their highs. What happens to some of these favorites? What are the charts saying?
Well, Nia, the laws of gravity had to work sometime. You have a thousands of crore order book, but your delivery, it's great as a longer term point of view. Maybe some of these things ran much ahead of their time, Niraj. So not very surprisingly, needed reality check, and that is sort of happening. Now, Inox Wind that you mentioned, it made a rounding top, Niraj. It's finished an impulse Elliott wave count. And if you go back just a little bit in time, Niraj, now specifically Inox Wind has gone up from 22 to 260 in a matter of 2 years, Niraj. So, I mean, that's huge. Somewhere you have to have some sort of a technical time price correction. So many of these stocks, maybe from a longer term point of view, like you mentioned, these favorites like maybe railway and defense, they would do well, but they had gone up as if they had discovered gold reserves or something. So somewhere we had to see a decent correction, which it had conveniently, or I wouldn't say conveniently, but it had completely disregarded it, oblivious to anything in terms of a correction. And many of the PFCs, you see the PSU banks, Niraj, that is the same thing. Even something like a PFC, REC, 80 to 580. Come on, somewhere is going to take a breather, it's going to distribute, consolidate, take some time off. So all that is happening, and when it happens together, it snowballs. I mean, and you spend a long time in the markets, Niraj. Our markets, or even worldwide, markets never correct, they always crash, Niraj.
Okay, Siddharth Khemka also joins us now on the conversation. Very good afternoon, Siddharth. Turning out to be a bit of a painful afternoon, but nevertheless, greetings. What are you doing right now? So before you came, Hemen told us about how he wishes you could take the afternoon off, order something online and enjoy instead of the stress. Are you feeling like that, or are you seeing any opportunity?
Yeah, Tamanna, hi, good afternoon. So unfortunately, we cannot do that. We have clients to answer, and a lot of queries. So the good part is people are asking us how much more downside do we see? Is it the time to start buying or nibbling into stocks? And what are our favorite picks? So we are not seeing any panic on the street right now. And as the other guest highlighted, I think, yes, there were pockets of excesses in the market. And we all know that markets will not go up in one direction. So there has to be some consolidation. And we were just looking for that. If you look at the overall earnings growth scenario, while I have a list of things which are in favor of the Indian equities, but if you just look at one major point, that last 2 years, Nifty earnings growth has grown at about 30-35% in FY23 and then about 20-22% in FY24. From there, FY25, the earnings growth expectations are in the region of 13 to 15%. So definitely there is a kind of a lower growth on a high base, and that definitely needs to lead to a market of a time correction, because we can't continue to trade at 22 to 24 times on a 1 year forward PE basis. So there has to be some consolidation, and we were looking for reasons. Now the war or the escalation of war-like situation in Middle East, which led to a higher crude oil prices. If you look at one of the biggest you can say risk to the Indian earnings growth is the commodity prices, and that is what exactly played out. So I would not say that valuations by itself is a risk. It just leads to profit booking, which is healthy, and we are not concerned about that so much. What is of concern is definitely the commodity prices, or you can say the crude oil prices moving up way beyond the comfort zone. And if the escalation...
You mentioned that, of course you have to field client calls this afternoon. What is the most frequent question? What's the FAQ you're getting, and what are you telling them?
So yeah, Tamanna, so the first question that everybody's asking is how much fall are we expecting? Where will this fall stop, and when can we start buying? And the standard answer that what we are giving is, it's as I was trying to explain, that there is kind of some excesses that is built in some pockets. For example, Niraj was talking about railways, defense, PSUs, which had moved up one way for the last 3 years. And hence we believe there will be some consolidation. In the market, we don't see a huge downside. There could be another 2 to 3% downside at max in the Nifty. Mid cap, small caps, there could be even more downside, about 4 to 5%. But I think post that, maybe in 1 or 2 days, where the situation will kind of stabilize, and then we can start adding on a gradual basis. So while it is very difficult to time the market and know exactly the bottom is, but the correction, including today's, will definitely be a good, attractive opportunity to add to some of the good fundamental stocks. And we have made the list, and we are trying to push that to our customers as well.
Anything? So one comment that came in, Siddharth, is too early to buy, too late to sell. That's Hemen's, quotable quote at the start of the show. Do you agree with that? Is it too early to buy, too late to sell, or is there some opportunity in the middle?
So yes, it is. You can say there is definitely an opportunity in between. Markets will always give you opportunities. If you think that over the next 2 years, 3 years, 4 years, market will recover and do well, it is an opportunity to buy. And if you are a trader and you are looking to exit at a peak, I think, yes, there could be some more downside if the war-like thing escalates in Middle East. If the FI selling escalates, what we are reading is some of the FIs are now going back to China and increasing weight there after the sharp underperformance that Chinese markets have had over the past 2 years. With the latest round of stimulus and valuations being comfortable compared to India, there could be some weightage reduction from India in favor of China that could lead to selling. And that is a trailer that we have just seen. Just remember the December 22 when we started seeing the barge of FI selling, almost 3 lakh crores of selling from FIs. Now, to counter that, the domestic buyers are there, the institutional and the DIIs as well as the retail buying will definitely provide the support that we are looking at the market. But net, it's a good time to start accumulating.
Okay, well, Accumulate what will always be the question. JP Morgan thought that accumulating IT is quite the right thing to do. In fact, they're quite bullish on the IT pack. Rucha Johnson with some details of that report, because that report presumably is the reason why Nifty IT is certainly up 0.5% today. Rucha, good afternoon.
Good afternoon, Niraj. As you rightly mentioned, JP Morgan is bullish on Indian IT and has upgraded two stocks, that is Emphasis and LTI Mindtree, from a neutral rating to an outperform rating. Well, we'll understand why JP Morgan has done so. Well, the company believes that, the brokerage house believes that these two companies will set to benefit the most from a recovery in the BFSI, that is the banking and financial services space, because these two companies have relatively high exposure to the banking space at around 35% and 59% respectively. Now, BFSI has also seen positive commentary from many IT companies over the last 3 months, and adding to that, there's a recovery in the capital markets and the investment banking revenues in the US, and this could therefore result in higher tech spending by the clients, which could in turn convert to revenue for the Indian IT companies. Now, going forward, the brokerage house expects that the US banks earnings would also improve, and therefore this could prove as positive for IT companies with significant exposure to the banking space. And this is why JP Morgan has upgraded both these stocks. It has given a target price of 6,900 to LTI Mindtree, that implies a potential upside of around 13%, and it has given around 3,400 of target to Emphasis, which implies around 20% upside. So overall, bullish on these two stocks on the back of revival in the banking space.
The other stock that you've been tracking today, Rucha, and I think that also merits a mention, which is Vodafone Idea. It hit 52-week low on reports that the DOT, that's the Department of Telecommunications, has issued a notice against the company on spectrum dues. Rucha, what dues are these, and why is this now of concern for the stock?
Right, so Vodafone Idea has slumped in trade today because media reports claim that the Department of Telecommunications has issued a notice to the company because of its failure to issue bank guarantees with respect to its dues prior to 2022. Now, these reports also claim that these bank guarantees were set to be submitted in September this year and amounted to around 24,700 crore rupees, which the company has failed to do so. Now, remember that Vodafone Idea has around 70,400 crore in spectrum dues to be paid to the government, which with the first tranche of payment beginning from September 25, that is September next year. Now, Vodafone Idea has had earlier approached to the Department of Telecommunications as well for seeking waiver of such kind of bank guarantees, and even the ministry met with the Department of Telecommunications to consider waiving the requirement of bank guarantees by all the telecom companies, but for dues after 22. So this has not actually happened, and nothing has been concluded out of the meeting, and that is why the department has sent a notice for failure to submit bank guarantees by Vodafone Idea. Now, talking about Vodafone Idea's performance, well, it has been down around 15% over the last 6 months and has been continuing to disappoint the investors.
Yeah, it certainly has been. Thanks, Rucha, for that. In fact, just pull up just before we get to our guests. And by the way, we need to mark the markets too. But just look at this. This is from around the time that the tariff hikes were announced. From that point of time, look at the difference in performance for a Vodafone versus an Airtel. And, everybody was saying that the tariff hikes would be a shot in the arm for Vodafone, 2G customers going to 4G, big spurt. The stock price performance has been completely different. And Siddharth Khemka, log feeling bhara rahe the Vodafone mein, paisa wana Bharti Airtel mein. What's the sense? I mean, what does one do now?
Yeah, Niraj, actually we have been recommending Bharti Airtel. मतलब जो strong player है वहीं पे पैसा बन रहा है. लोगों को overnight पैसा बनाना था जो बहुत difficult है. If you look at Vodafone's balance sheet, it has always been stretched, and as you rightly highlighted, the tariff hike was supposed to give a kind of lifeline to a player like Vodafone. Despite that, it has been unable to benefit from that. The balance sheet continues to remain bleak, and with the Supreme Court not giving that relief, it now the entire thing now stands with the government. How much more dilution can they do to convert those dues into equity? That will not help the share price. Maybe it will lead to a high market cap because the debt will convert into equity. But as a retail shareholder, I will not benefit. So I think this is a case which will continue to be impacted, and clearly in this telecom space, which is a very capital intensive space. You need to spend. Now the 5G rollout has happened. So we would continue to be with a player like Bharti Airtel, where cash flows are very strong. Growth has been pretty good both in India and luckily at the right time, the African business has also kind of turned around and started reporting good numbers. So I think it's clearly a case of winner takes it all. That will be the case in telecom as well. And even at these valuations, I would be comfortable buying into a Bharti Airtel for the next 3-4 years rather than trying to take a punt on Vodafone at this juncture.
Why? Look at what markets have been doing. Smart recovery there from the day's low on the bank Nifty. It's been actually quite astounding. Not quite in the green, some way away from that. But look at the kind of pain that we were under and the kind of recovery that we have seen relatively in. Is it now time to buy or still to order some food online?
I told you, Tamanna, you keep the last hour's low as your stop loss, and I said Bank Nifty looks a bit better. So if you would have done that, you probably would have made 500 points by now. But no, I guess there will be some trepidation, some ups and downs. Now in the next, we're in the last half hour of trading today. In the next 3-4 trading hours, we don't break today's low. I guess then one can start, in anticipation, one can keep once again today's lower the stop loss for a bounce coming in. A 400-point bounce is in the offing. And as far as Nifty concerned, Bank Nifty, it happens in a few minutes actually. So I believe a 400-point bounce is there in the offing. Maybe this 400 could...
What's the trade right now, Himin? On, say, let's start from the Bank Nifty.
Buy Bank Nifty, stop loss of 50,200. This is your cash market levels.
50,200 is the stop loss. Buy Bank Nifty. Right now at cash market levels. Very quick break. We're coming back with the top buy today, sell tomorrow ideas on what is turning out to be a very interesting and volatile afternoon.
All right, back with India market close right here on NDTV Profit. There's a bit of a recovery. I mean, let's not overplay it, by the way. The Nifty was, in fact, the Nifty 50 is again kind of given off some of the gains. So, yes, there was a recovery from day's lows, but it's also being sold into as well. But, therefore, in a market which is as choppy and volatile, it pays to try and understand which are the stocks that are standing out in day's trade throughout the day. Mika has a list of 2 or 3 that are standing out and doing well on a day of carnage at the mid-cap end. Mika, what are these?
Yeah. Good afternoon, Niraj. We have 3 stocks that have been in focus today since the start of the day. Up first is Heidelberg Cement, which hit an intraday high of 17.9%. Now, this was after a media report stated that the Adani Group is eyeing to buy out the company at a total consideration of 10,000 crores. However, it is to be noted that the implied EV per ton valuations of this deal does not fit into the criteria of cement M&A deals, which have to be lower of 110 to $120 per ton, and Adani Group replies no comments on the latest news flow. When you talk about what's working for the company, well, they've announced debottling of their clinker capacity, which will increase their output, cement output by 2 lakh tons per annum. They are also increasing their green power share to 40% in FY25, which will help reduce their costs. And now next up is AstraZeneca Pharma India, which hit an intraday high of 9.4%. Now they aim to bring 15 global products to India by 2025, with 9 already approved. They're using AI-based lung cancer screening tech in collaboration with state governments, and they've remained to be continued focus on cancer, biopharmaceuticals and rare diseases. And they have over 50 clinical trials in oncology, respiratory, cardiovascular areas. And last one is Macrotech Developers, which hit an intraday high of 4.2% on the back of their Q2 update. Their pre-sales were up 21% year on year. This was the best ever quarterly pre-sales despite the inauspicious period of Shrad falling in September 2024. The company added 4 new projects with a total gross development value of 5,500 crores, which took their business development total to 16,600 crores, which is 75% of their FY25 guidance. Lastly, their net debt did increase up over 4,900 crores on higher business developments, but their net debt to equity ratio still remains below the 0.5x level.
Okay, thank you for that, Mihika there. Macrotech still doing okay today in trade, 2% up, not badly at all. Some recovery in the markets, but not enough to cover up the kind of pain points that we've seen. Manishi Rai Chaudhary is now with us. He's a veteran investor. Mr. Rai Chaudhary, great to speak with you, and thank you so much for joining us this afternoon on NDTV Profit. I'm just wondering, what really do you think is the pain point here? Is it the same narrative we've been seeing the last few days of FIIs fleeing or flocking to China at the cost of India?
It's a combination of several things that have hit the Indian market. First, the geopolitical tensions in the Middle East have been, sort of boosting energy prices, oil, and India, as we all know, is one of the biggest importers there, potentially, therefore, leading to expansion of the trade deficit and kind of forcing a weakness on the currency. Second, as we now all know, the stimulus measures announced by China have led to more than a 30% spike in the market over last week. And it has brought back a significant degree of foreign investor interest into this previously unloved and, under-owned market. So when you put all these things together, it's quite, it was kind of expected that an overvalued market like India had to correct. We have seen about, I think, a 5 to 5.5% correction over the past 1 week. But I would also think that this has a silver lining. In the process, while, Greater China has moved up by 30% or more, Asia ex-Japan itself has moved up about close to 12 to 15%. India has declined about 5 to 5.5%. Therefore, the relative value premium that India had, and it was quite a severe premium, that has compressed, that has declined. So, if this situation kind of continues, or if India's valuation premium shrinks a little more, I think institutional investor interest could come back because the longer-term fundamentals of India have not really changed.
So, Manishi, since you have the choice of doing everything, maybe a week ago, 10 days ago, good afternoon, of course, Niraj here, A week ago, 10 days ago, you may have chosen to go to China. Now that some bit of that difference has been corrected, where does incremental dollar go? Does it still go largely into China or some of the other markets, or does now India also become a fishing pond?
I think, at some stage, we're kind of getting closer to that point where, foreign institutional investor interest into India would come back. Maybe the relative valuation needs to compress a little bit more. Okay. Now, coming back to your original question, where does the incremental dollar go? The Chinese market was so amazingly under-owned and undervalued. If you look at MSCI China, it was trading at between 9 to 10 times, while the longer-term average was about 13 to 14 times. If you look at Hong Kong, the Hang Seng Index was between 8 to 9 times. It's just gone to somewhere close to about 10.5 to 11. There are still extremely undervalued, cheap stocks in these markets, which are trading not just in single-digit PEs, but also anywhere between 6 to 8% dividend yields. And there's a sizable population of such stocks in both onshore China and Hong Kong market. So I think the interest of investors in the Chinese market would not really abate right away, just because the market has moved up about 30%. Maybe the easy money has been made, but the interest would still remain for some time, and investors would possibly try to identify these, really cheap stocks, many of which still remain in these markets.
Okay, just trying to understand, Manishi. So you're saying that world was underweight China. The cover-up is, the move right now is expected. In terms of flows or, moving away from India as a result, how long do you see that continuing? And what happened to the inherent strength of domestic investors and retail inflows coming in large numbers? Why is that not helping us now?
It's difficult to put an exact timeline onto this phenomenon, how long this would last, and when would the interest in India would exactly come back. But I think if you look at the longer-term average premium that India used to trade at, let's take Sensex or Nifty compared to MSCI Asia ex Japan. I think a 10-year average premium was somewhere around 40%, somewhere between 40 to 50%, which had gone to about 100%. And now that same premium has declined to somewhere around 60 to 65%. So it's getting there. It's coming back to the longer-term average. Now, the remaining part of this valuation correction, exactly how that would be, is difficult to guess. It can even be in the form of a time correction, where Sensex, which is down close to about 80,000 or so, drifts, for about a quarter or two, while the North Asian markets continue to move up. So the valuation correction could continue in the form of a time correction for India for some time. Now, the second question that you talked about, in terms of domestic investors, that resilience, I don't think the resilience of the domestic investors or the quantum of money that they're putting in through the SIPs or one-time investments, that has really gone away. It's early days in this correction. We have had this correction for just about a week or, maybe just more than a week. The basic driver of these domestic allocations, that the domestic investors are still under-invested in equities, just about 5% of their savings are in equities, that still remains correct. Now, everyone would possibly be looking at the interest rates. Now that the Fed has started reducing interest rates, the RBI may not be far behind. If that happens, you would see fixed income investments becoming relatively less attractive, and therefore equity investments becoming all the more attractive in the medium term. So that could turn out to be a trigger.
Thank you so much, Manishi Rai Chaudhary. Always a pleasure to speak with you. That's the take coming in on Indian markets, and China really is the pain point, right? If you're underweight China for the longest time, as global investors have been, they're moving there. It's coming at the cost of India. That's clearly what we've been seeing in the market right now. But the question then is, what is the opportunity for the Indian investor? And Himen, let me come to you over here, because we've been talking about let's wait for a correction, buy on dips, buy on dips. Are those dips in sight at all? Unfortunately, that bit of a bounce back we saw also seems to have been sold into.
Yes, I think one can take a 1/3 buying position at this level, Tamanna. We are off for 26,300 to 24,800. So I think it does get tempting. And yes, only quality, only mainline stocks, Tamanna. And like I said, in 3 or 4 parts, maybe the first part can be nibbled in today.
What are these mainline quality stocks? Can you name a few?
Reliance Industries, Adani Port, Bajaj Finserv, Bajaj Finance, ICICI Bank, ITC, and some of these, and even a Tata Communication. Yeah.
Siddharth, do you have any sort of go-to list where you're seeing value coming in, or you'd wait for a bit more settling?
No, so Tamanna, as we discussed, it will be very difficult to exactly time the bottom, and I think yes, you can go about 1/3 or 1/4 of your money right now with a 5% correction in Nifty. Midcap, small caps have seen even bigger correction. So some of the pockets, for example, BFSI is a space we like. IT we definitely like. Healthcare is something where earnings growth are pretty strong, and we believe that can be another space to focus in. So for within the BFSI, banking, the large banks we like are ICICI Bank, very steady growth in the last few quarters. Even this quarter, we are expecting steady growth. Within IT, HCL Tech is something that we are liking a lot, and pharma is another space that we believe could give that kind of resilience in this market. So Cipla and DVs are something that we like. If you look at even more some of the other sectors, if I were to include capital goods is a space which had done well and has seen a good correction there. Something like a Larsen is interesting. Another key factor that we are liking is the rural consumption is picking up after 2 to 3 years of underperformance, and we believe that can be a place where a lot of opportunities can be seen. Companies linked to the rural economy. So some of the staples, for example, HUL, which is our preferred staples company within the beverages we like. Varun Beverages has seen a good correction. Fundamentally, nothing has changed in the company so far, and valuations are now looking attractive for a company which has given consistent growth in the last few years. So some of these ideas are and pockets are something that we like.
Absolutely. All right, one company which is in focus is Ola Electric. This all day today actually, but that pain point deepening, about 8.5% down. A whole series of events and factors which has been hurting the stock. Puneet is telling us more. Yes, Puneet.
Well, thanks for that. So, this issue price, the current price of Ola Electric is now down below the first day listing gains of the company. So that was around 91 to 92 rupees. So that's for the first time that it's breached this benchmark as well. And there are a multitude of factors that's affecting the company. And the largest center of it is the service center issue that we've spoken about. Now, we did put out a very extensive story on our YouTube channel as well. So do go check it out. But currently the company operates roughly around 500 service centers. And these centers are not being able to turn around the scooters faster. So according to our research, there is roughly 20 to 25 days that a scooter is there at the service center, and this turnaround time is really slow compared to what the company sold in the last 3 years, roughly about 7 to 7.5 lakh scooters. So the pressure on these service centers is the key issue here, and that's affected the growth momentum as well. So if you look at the last 3 months sales of the company, is down for roughly about 41,000 that the company sold at the back of June, in July, sorry, and in September the company company sold roughly about 24,000 odd scooters, and it's important to note the growth percentage. It was doubling or growing more than 100% for the first 4 months of this fiscal year. You can see that the growth has moderated now to 30 to 35%, and in September also that was the case as well. This has of course led to the company losing market share as well. At the end of September 2024, the market share of the company was roughly about 27%, and this is down from 46% that the company reported in the end of June. So just in these 3 months, it has lost a lot of market share, and that has been a gain for someone like a Bajaj Auto, which has almost doubled its market share from roughly 10 to 11% to around 21%, while TVS Motors has been able to maintain its market share of around 20 odd percent. Also take a note that Ather's market share increased as well from 8% to about 14% now. So it's become extremely more competitive, led by all these companies launching lower price variant scooters, and that's definitely reflected in Ola's market share being affected. Now, while we have spoken of the issues, what is the company looking forward to as well? And so should you. HSBC had written a note. It had initiated coverage and then it's followed up. They have a target price maintaining it at 140 rupees per share, and they seem that these issues are transitionary and expect the company to come out of them in the next few months. They also said that Ola is currently offering an 8-year warranty on the battery, or roughly about 80,000 kilometers on the same at no extra cost, while the company has also launched the Boss initiative, which is basically the biggest Ola season sale, launching the lowest 2 kilowatt battery scooter at just about 80. So finally, just one thing I wanted to mention: valuations EV to sales still at roughly 7 times EV to sales, but it's down from the 12 times it was at the issue price. So a few things
but
to look at.
But one thing you didn't mention, Puneet, is, and I don't know how this is indicative as a factor or not, is that whole Twitter spat.
Yeah,
social media spat between Bhavesh Agarwal and Kunal Kamra. I mean, I don't know. Can a stock, thanks for that, Puneet, can a stock lose so much money because of a Twitter spat? I think because what happened after that, everyone jumped on it and reiterated that they had a problem with service issues, etc., and just put focus on it. That's or maybe it's also a bad day. Everything is
all put together.
Everything is down in the dumps. FADA numbers are bad. Auto is looking tough. That's something Samir Arora also told you.
Or actually, maybe we can hear Samir's view on auto before we talk about this, because CLSA is spotting out too triple witches. So for Ola too, it seems to be triple witches. All bad things have come together on a single day.
Yeah.
Which is a Twitter spat or an X spat. And
some are self-inflicted problems and some are not. But having said that, on autos, I found this bit of what Samir Arora told you today, Niraj, very, very interesting, and why he's not excited at all about the autos business.
In addition, what happened is that there were new competitors who had no plans of being in IC business, and suddenly when the EV business started, they said, oh, this we also can do for whatever reason that they thought they had. And so from Tesla to BYD to Ola, all these guys who were not there in the original industry structure are new players. Again, has anybody ever said to you that because we are all moving to EV, then the market size is going up from what it was, say, before this happened, or that the profits will be higher? No. For the same industry, the number of players are more, and you are all having to invest. Now, the only thing we can say in India is, oh, we are protected. You tell me how much multiple will you give to a company which is making its money because of protection, and you know that every guy, not just the Korean guy, every guy in the world has warned about declining sales. Their stocks are down 20-30% this year. Whose multiples are 4 to 5. But no, we are here. So in some things we also accept, but this is too blatant according to me on every angle.
Yeah, so it's not just Ola Electric, to be honest. All auto stocks are under a pain point, but so is the Indian market. And you know, this note, Niraj, on what CLSA is saying, the view on China can explain some of it, because they're saying they've raised exposure to China by lowering India overweight. So China's rise is coming at India's cost as far as CLSA is concerned. They're raising China to 5% overweight, cutting India overweight to 10% from 20%. Yeah. Relative to India, China trades on 53% forward PE discount, a 64 PB discount, and offers 2.5 times the dividend yield. So the most interesting line I found is modest upgrade to China using India as a funding source. And that's That's why you're seeing the pain.
You could argue that one of the reasons could be that. This is, of course, CLSA recommending their clients to do so. But you could argue that a lot of people have probably done that because, I mean, last week's data, right? I mean, I think $12 billion worth of inflows into China. India playing a part there. I think, what,
30,000
crores, right?
crores just in October so far. And we'll, of course, wait for today's number, which will, my guess is, be fairly bulky.
Yeah. But the other interesting piece is, Tamanna, that they are essentially saying the same reason that everybody's been saying, right? Oil price uptick that you and I have spoken about, the new issuances which the Axis AMC CIO spoke about as well in that big note that as is the demand high, but so is the supply.
Yeah.
And then the retail investor appetite is the other interesting piece that SEBI steps to curb retail trading of equity derivatives may lessen demand. Now, I don't know if all of that put together is also the reason why specific brokerage stocks, for example, are taking a serious punishment today, right?
But then look at BSE. It's defying odds, gravity, and logic.
Yeah,
I don't know. BSE is down today as well. And nothing can survive today.
Yeah.
So today is an exception.
Yeah.
But otherwise, BSE has been defying all of this.
But the last point is interesting, Tamanna. They say that India still offers the strongest scalable EM growth story, and this is only a temporary reduction in the Indian equity exposure.
So you know, frankly, then the question is that when global money comes back, where does it come back, and can you position yourself the right place to be in the right place, right time? Siddharth Khemka, I want to bring that to you, and just interesting insights from that CLSA note, and perhaps that's what global investors are also looking at. What should be the strategy for Indian investors? Where do you position yourself so that you are well poised when the global money does return?
Yeah, Tamanna, I think the points highlighted are very relevant. And as I was telling you earlier, that markets were looking for a reason to correct and we were unable to find them. So the same retail flows and HNI flows would kind of come back and support. So for example, Friday we saw almost 10,000 crores of FI selling, and we had a DI buying of about 8,000 crores. Still the market went down. And again, today we could see another 8 to 10,000 crores of FI selling. There is a counterpart, but nonetheless, the FI selling intensifies and brings down the market. In terms of positioning, as I said, position yourself into sectors where you see earnings growth and valuations are comfortable. For example, BFSI has not participated to that extent where a lot of these themes or your mid-caps or some of the other sectors have seen that rally. BFSI is relatively not, or you can say has underperformed. But the earnings growth momentum continues, and with the interest rate cut cycle, I think some of the growth will come back. Margins will also kind of improve. The NIM compression has kind of seems to have bottomed out. And that is one space where a lot of FIs will come back when it comes back in vote, because that is one of the largest sector in India and can absorb bulk of the FI flows when that returns. So it's a good opportunity for retail investors to look into some of those space. Another example is IT. This just at the beginning of the cycle of the growth, and hence again valuations are comfortable. Growth is forthcoming, and that is what we are seeing with the US economy now doing well, and the data coming out to be stronger. The spending there could be much better. Healthcare is another space, as I spoken about. Overall consumer staples, durables put together with the festive season also picking up pace. I think that is another space that can do well.
Hemain, what are the closing strategies? BTST ideas?
Did you say BTST?
STBT.
Okay. Firstly, I'll start with a standard warning that I learned in college. Caveat emptor. Buyer beware. So start with that. But yeah, on a serious note, I have two BTST. Once again, high risk. Preferably should not be executed because it's like firing blinds. But anyways, a BTSC on Reliance Industries and a BTSC on Adani Ports. I think both would bounce tomorrow.
With so many caveats, I don't know. Anyone listening to this, Hemain, has no idea whether they should listen to you or not. But at their own risk, is what you're saying.
the basic idea is to confuse them so much that they don't do anything.
That's terrible. We want people to really have success because of what you say. But okay.
Yeah.
RIL and Adani Ports. IO2?
Yeah.
BTST idea. Yeah, so there's a BTST after all.
Interesting.
Some optimism coming in there.
Yeah, it's great to know that. Really good to know that. I mean, point well taken. Thanks for that. Just want to mark Diffusion Engineers. It's a new listing, so therefore, obviously, I can't ask Hemen about Diffusion. But that stock is up 5% yet again, post listing. Prashant Jain, erstwhile HDFC AMC, and now 3P has bought in bulk deal, had an earlier allocation too. It might be too soon for a broking house to initiate coverage, maybe Siddharth, but have you had a chance to individually study Diffusion Engineering or any other company in this space?
Sorry, unfortunately, I have not looked at this space, Niraj.
No, completely understandable and fairly okay. What's also just broken out a little bit in the last few minutes is Vent. So Vent has gained about 5% from the intraday low of 13,822. But Vent India will come up on your screen, and I think that stock has moved up in trade. So that's one name that you should certainly mark just very quickly. There is strength there. There is strength in, like we said, Diffusion Engineers, yes, but there is some bit of uptick in BEML too. So watch out for that too. But that spike in Vent is quite stunning. So that's the one thing you certainly keep an eye out for. Siddharth, one idea that you would be comfortable buying at lower levels, something that not necessarily today, but something that you would keep on your radar. A mid-cap name. Large caps are easy. Let's talk about mid-caps.
Yeah, definitely, Niraj. So the one stock that I would keep in my watch list is Varun Beverages. The company has kind of shown good growth, not only in the beverage segment, they have entered into the food segment as well, where they are doing very well. Some of the newer products that they have launched, that has done well. And now the company is also acquiring rights in some of the global markets. For example, they have got a franchising agreement with PepsiCo to manufacture, distribute and sell snacks in Zimbabwe and Zambia under the Simba Munchies brand. The overall the market has expanded by 67% with the addition of these two new regions, and we believe that the African snack market could be in the range of about $12 to $13 billion and is expected to see a growth of about 8%. So that is a good growth strategy. Apart from India, we have seen these are some of the long-term acquisitions that plays out over a period of time, and with the partner of choice for PepsiCo in India, we believe that the company could continue to report strong numbers in excess of 20-25% earnings growth for the next 2 years. So that stock will be under my radar after the correction.
All right, gentlemen, both of you, thanks so much for taking the time out and being with us today. Really appreciate your time this afternoon. Difficult day of trade, and it's shown in the way the Nifty is behaved, by the way. I mean, I don't think too many stocks have changed, but just bring up the Nifty intraday and it'll show you a bit of a spike up, then a bit of a collapse and a bit of a surge, the dying moments of trade. I think, the points that Tamanna is pointing out towards viewers, pretty interesting, the volatility that's happened.
You need a microscope plus a binocular to look for that upswing.
Except for that peak though.
This peak's okay.
Yeah,
this peak's okay. But no, it's a tough day. It's a tough day of trade. No doubt, Niraj, and I don't know. I don't know if it's going to get a little better tomorrow, because the factors that are bothering the market is not something that changes overnight.
Yeah, and very idiosyncratic, because as we discussed at the start of the show, that India seems to be getting punished. But very quickly, before we talk about the broader markets, because that's where the real carnage is, just the large cap contributors, if you will, if not the heat map, just very quickly. And the contributors there, HDFC, Reliance, top draw. So banks have clearly taken it on the chin along with Reliance Industries. So that's the one set of points. And the ones holding out, essentially IT and Bharti Airtel. Sure, M&M chipping in there, but it's essentially IT and Airtel, which are kind of helping the market a little bit.
The market breadth hasn't gotten too much better. We'll pull up the advanced decline just to see what's happened there. Slightly better. It was even worse when we started, if anything. You had double digits in advance and declines over 2,000, so slightly better, if at all. But yeah, it's been a painful day. People's portfolios are going to look bad. Are these opportunities to buy? Well, the jury is still out there, at least with the analysts that we spoke to. they're not too clear yet. Let's just pull up the sectoral indices to see what's beaten down the worst of all. And apart from Nifty Media, PSU banks, public sector companies, small cap. So the broader market's really taking that knock today. We'll pull up the BSE 500 gainers and losers, and then you see very, very clearly the pain continuing. I mean, holding company Bombay Burma, so no real reason why it's seeing that much of pain. But a rail Vikas, Sri Renuka, so your sugar, your rail, all of them actually across the board seeing quite a bit of a hit. Lloyd's Metals, which was running up a fair bit, has taken a breather today. But on the winning side, some smattering of pharma news coming in for Natco, AstraZeneca, maybe that way. NBCCs because it's record date for a bonus issue. So that really has helped. But otherwise, tough to find those positive stories.
Yeah, unfortunate. But let's see if tomorrow is a different day. For now, though, from Tamanna and me and the team that put this show together, thanks so much for watching.